Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we had change on the larger time frame. As you can see that we traded below last week's low, effectively stopping the 3-week one-time framing that we were trending up on. No big difference on the monthly, but yeah, I mean on the daily you can see how that move created an effective break lower from the 1, 2, 3, 4, 5, 6, 7, 8, 9 from the 10-day balance range that we were trading around the 3,000 figure. Now, with that being this current situation, definitely, I mean, that low of today is very structurally weak. It has, number one, no excess, and it is within, it's one tick lower than the low from the 10th of September. So structurally, this level over here is to be looked at. Below that, we have the gap that held in, I mean, the remaining of the gap that's in place. And below that, you have the key 2945 area, which was the top of the previous intermediate term range. So the focus for the moment is to assess continuation or lack of it from that move lower. Further details, we will see them on the market profile, but we need to remember that if this fails and trades back up to the 3000 area, now the top of that range and the all-time highs will likely get into play because there's no excess either on that side. But right now the focus is on the downside. We need to assess continuation to see if that move will sustain or if it is weak. On the market profile, you can see that early in the morning, despite closing the gap, I think that the way I was reading this is that the first thing we did at the open before closing this gap was to close the double distribution left on Friday. Closing this double distribution and getting to the 3008 area, I think that was pretty meaningful to the upside because that effectively validated the late move that we saw here. Well, not the late drop, but the actual move that held through the day. A little bit later, we closed that gap, but notice that at this point in time, we had a 3-wide profile, higher value. We closed this double distribution, so it was looking good. The POC from the day before was tested and rejected a little bit. Then C open. We had the 3-wide up here. Sorry if it is a little bit small, but I wanted to include the whole picture on the screen. It was okay. The problem is that on D, E, F, we broke lower aggressively, very emotional. When the news hit the wires that there are some impeachment concerns and the market got nervous and we started breaking lower, and it was hard enough to get below all the lows that we had in the area and tag the low of the 10th of September. Now, I did tweet about it. We had an effective break from the balance range, but I noticed that the move was very sudden. Volume was kind of not justifying the extent of the move, and we left a very poor structure. At that point, we had 1, 2, 3, 4, and then we formed a 5th distribution down here. When you move that way with 5 distributions and volume is not the biggest volume you've seen, and you cover 30 plus handles, the likelihood is that the market has gone too far, too fast. So when I was looking at the H period, which I'm gonna zoom in a little bit, I was looking at the H period, and what I noticed is the H period extended on the lows and immediately went back. And then we changed to the I period, and I said, and I did tweet this, I said, if you extend to the downside after a move like this, and you immediately go up and take the high of the previous period, that tells you that the downside is already being is a little bit weak, because that's not the way it should behave, especially if you take that high and you leave a few ticks separation with the previous distribution. So nonetheless, the market came back down and stayed there for a while. And then some news hit the wires again, that the President Trump was going to collaborate and he was to disclose and to authorize the disclosure of a conversation, that this conversation with the Ukrainian president that everybody is talking about. That created a short squeeze, and you see the massive jump that you had on J period. Obviously, when the market is structurally weak and the inventory is to one side and you have this type of news, you would expect this type of sudden move. But the thing to notice there is that despite the move, yes, we closed the lower two distributions, but you failed to reach, despite the aggressiveness of the move, you failed to touch this level, the 80.75 that we mentioned on the previous briefings, that I was considering that the low of the range. So actually that's the level we broke from. You failed to touch it. And halfback was just a little bit higher up, and you required obviously to test that level and close the distribution. That didn't happen on the squeeze. Normally when you have a short squeeze, it's very aggressive, and having these references in the vicinity, that would not be a problem to just get there. Well, this thing stopped just before, and I was thinking, well, that was a big jump. It was almost a 30 handle jump. Probably will do it on the next period. You should see continuation. Surprise, surprise, K opens, doesn't challenge the J high and starts coming down. When I saw that, I said to myself, well, now, yes, you close this lower two distributions, but you have a bigger lower distribution, which is below halfback and outside the range and with a separation. So at that point, having this backing and filling, if you start heading down, this poor low becomes the likely destination, and the structure is very vulnerable and the odds are very good that at least you will attempt to continue. So towards the end of the session, what we saw is that it is possible that the market inventory is still a little bit short, because with this backing and filling, you could not approach the poor low. And you bounce a little bit towards the end, probably people adjusting positions ahead of the close and during the close. And that's it. That's a story for the day. Now, focus for tomorrow definitely will be on value development relative to this lower distribution. Notice that the distribution has an incomplete auction to the downside. There's a poor low, there's no excess. The level itself is pretty weak because it is one tick below the 10th of September low. But yes, I mean, the lower distribution separated holding is the focus. If you start getting acceptance back inside the range and you close this distribution and you start trading towards the 3000 area, that will denote change versus today. But if you get acceptance within or even lower, the likelihood is that you will attempt at least to close this gap. Anything can happen. Odds are just odds. This impeachment thing starting to hit the markets today, and pay attention because news can really move this market really quick. So anything can happen. But now, I mean, with the move that we had today, the odds have changed. We're now outside of this range. What we need to find out is this backing and filling and we're going back up, or is this not done yet to the downside?